Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So Bitcoin is still trading right around $43,000. This is essentially the same price that it's been at for the last couple of months. You can see that we came into this range in early December, and we find ourselves at essentially the same price that we were 2 months ago. And the only thing that's really changed since then is that these longer term moving averages, right? Your bull market, your 20-week SMA, your 21-week EMA, those have slowly climbed to catch up to where price is, right? And so if you were to look at, say, the extension, the short-term bubble risk, right? The extension from the 20-week moving average, while Bitcoin's price has remained relatively constant, you can see that the extension from the 20-week SMA is slowly going back down. Not that dissimilar from what we saw back in May of 2023, right? Where we had this pretty aggressive move up, and then the price of Bitcoin basically just went arguably sideways for several months before then hitting the bull market support band, right? I mean, you can see pretty clearly here, once we had this push up right there, it took about 12 weeks or so for Bitcoin to get back to the 20-week moving average, right? So if you were to look at this weekly candle here, we're currently on week 9, right? Week 9. Now, I should say there's no guarantee that we test the 20-week SMA in the short term, right? There is no guarantee. And I've said this many, many times. Sometimes when Bitcoin gets moving, it can go months without testing it. I mean, look what happened over here in late 2020 and early 2021. I mean, we basically tested it in October of 2020, and we didn't retest it again until the following May. So there are occasions where you simply do not test it as soon as you might think you would, right? I mean, you could already argue we've taken longer than what we previously saw, right? I mean, from right here, from early January until this test was about 8 weeks. And then from leaving the 21-week EMA right there to testing it right here is about 10 weeks. And then leaving it here to here was about 8 weeks. But if you go out from late October or mid-October, it's already been 16 weeks, right? So it's already been a longer period of time than it normally is. Now, there's good things and bad things associated with that, right? I mean, if that's the case, then it means Bitcoin has been relatively strong for a long time. It has gone 4 months without testing the 20-week SMA. The counterpoint, of course, is that the longer it takes to test it, the more likely we might not hold it. We're still in arguably territory now where we could hold it if we were to go back down to it. I mean, if you go look at even the 2016, 2017, 2015 moves, right? I mean, we went 3 to 4 months, but the problem is if you go, say, 18, 20 weeks, you're starting to get into territory where it's been a long time. I mean, here's an example of 14 weeks. Here's an example of 13 weeks. So it's also like 2019, right? Where you didn't really get a clear test of it for a long period of time, right? We left it in April, and then we didn't really get back down to it until 25 weeks later. So again, looking at it today, we got above it mid-October, and it's been about 16 months. Okay, it's been about 16 months, and so about 16 weeks. So about 4 months since we've tested the 20-week SMA. And I've talked before about, this idea that Bitcoin, at least historically, doesn't mean that it has to, right? But at least historically, it does come back down into the bull market support band in about February of the halving year, right? Like it happened last cycle, it happened the cycle before that, and the cycle before that, right? Again, not suggesting that it has to happen. If anything, you should not assume that history has to repeat itself. But it's just to say, hey guys, if we do go down to the bull market support band, then that is essentially the norm for this time in the cycle. In fact, if you were to look at the year-to-date ROI of Bitcoin in 2024 and compare it to 2020 and 2016 and 2012, you can see that it's actually quite common for Bitcoin to, to basically not go anywhere for the first few months. I mean, it can move up a little bit, can move down a little bit. I mean, in 2020, obviously moved down a lot, but it also moved up a lot in the first part of 2020. It's pretty normal for Bitcoin to basically do much of nothing for the first, 100 to 125 days, right? That's actually pretty standard. And so that would take you all the way out until, March or April, right? And you could even, do something like take the average of prior election years and see that, we're slightly underperforming the average, but we are still very much in line with historical moves, right? We're still in line with expectations. I mean, we are slightly below where we normally are at this point, but we're not that much further down below it, okay? And so this is an important thing to think about. And the reason why I showed this chart is because if Bitcoin were to continue this type of price action, right? If it were to continue this type of price action, then it's only a matter of time before the 20-week SMA catches up to Bitcoin. Sometimes Bitcoin goes down to the 20-week moving average, which of course could happen, and it did occur in May of 2023, and it occurred in March of 2023, and it also occurred in August of 2023. So we know that can certainly happen. But again, what I'm suggesting is that the longer that takes, the higher the 20-week SMA is just simply going, right? I mean, in fact, if Bitcoin were to simply go down to the prior wick that it hit a couple weeks ago, that would actually now correspond to the bull market support band, right? Because the 20-week SMA, 21-week EMA, they've essentially been pulled higher. Now, there are other patterns we could look at, right? We've talked about the 8-week moving average and how it does tend to, provide support in an uptrend. Like if you're in an aggressive uptrend, you would expect that 8-week SMA to hold as support, right? You can see that it did it many times in late 2020 and early 2021. And if you were to go back to 2019, you can see that Bitcoin basically stayed above the 8-week moving average. And then once it got below it, while it did pop back up above it, it was unable to take out that prior high from June, okay? And so, looking at it today, we did go below the 8-week moving average, but only slightly, and we got right back above it the following week. So I would argue that you need more data to come to any aggressive conclusion, because, well, or I guess we didn't get above it the following week, but it took about a couple of weeks. We did get back above it on a wick, but it took a couple of weeks and we got right back above it. The 8-week moving average right now is at 42,500. So if we get back below that, then with a weekly close, then it would suggest the likelihood of going back to the 20-week SMA increases quite a bit. There's also a little pattern over here, right? A similar type of pattern where you got up into these highs, you got below the 8-week SMA, and then you got right back above it, only to then fall still back down to the bull market support band. So, right, same thing here. We had a wick below the 8-week, we got right back above it, and then down to the 20-week SMA, and then we went up. Over here, right, these were a little bit more clear cut, but flirting with that 8-week moving average, again right here, and again right here. And it can take, right, it can take a little while to resolve that. So I just wanted to show that this is still within the realm of what we've seen. And we also suggested that we would get a pullback in mid-January, okay, right? We talked about that for a long time, a pullback in mid-January. And, so far, I mean, we did get a pullback, right? I mean, it might not be as much as people want, but it was in line with prior pullbacks that we've seen, right? About 21% or so. These are all 21% pullbacks, 20 to 22% pullbacks, which is basically what we just saw. So that is in line with the pullbacks that we've seen throughout all of 2023. And again, if you were to go back to the 20-week SMA, right, like if you were to do something like this where you get a bounce and then you come back down, you get a bounce and you come back down, right? If you do something like that, could still end up being around the same percentage drawdown from that local high, right, that we put in going into the spot ETF. So in that regard, it's still pretty standard. And actually, if you look at 2019, we had similar types of drawdowns, that were pretty shallow drops, right? Pretty shallow drops throughout that entire move. And once you actually got a larger drop, right, of 30%, right, once that larger pullback finally came and people celebrated, oh, great, we finally had a 30% pullback, let's buy the dip. At that point, it wasn't necessarily smart to buy the dip because the dip just kept on dipping. So, it certainly seems like we are in a similar type of phase where we are, very much in QT. We're in a high interest rate environment, just like we saw back in 2019. And the pullbacks have not been very substantial, right? And I think it keeps making people want more, and then there's a good chance that maybe by the time you actually get more, you might get a lot more. So, and again, if you remember this rally over here, it lasted essentially until the Fed finally, pivoted. And I certainly don't know when the Fed's going to pivot. I do think one thing to sort of keep in mind, and I think, I might fall into this trap too sometimes, when you think about like a Fed pivot, it's not a Fed pivot that causes risk assets to sort of second guess what's going on, right? It's the risk assets or the economy maybe not doing so well that would perhaps cause the Fed to pivot, right? So I would think about it like that. I think a lot of people have made the case that we're still mimicking, like 2015, 2016 price action, which again I think is a fair assessment as well. And in that case, you can see that Bitcoin basically, it set a range, it slowly climbed, and it broke into a new range, right? So it's potentially doing something very, very similar. And so if you do get a larger pullback below the bull market support band, and if it, say, goes down to, say, the prior breakout zone at around 30K, then that would certainly be mimicking what we saw back in 2016. Right, if it were to do something like that. So I think that's another important way to look at the market and say, look, if it is mimicking the 2015, 2016 move that we saw back over here, then it's actually quite standard to, upon a breakout, to then go retest the breakout point. That would actually be expected, right? Now, I'm of the opinion that every cycle is slightly different, and you should not use one cycle alone to tell you what's going to happen, but maybe take elements from multiple cycles, right? Instead of saying it's the 2016 cycle, or instead of saying it's the 2019, 2020 cycle, perhaps it's some type of combination, or it's completely different. I think that's a valid way to think about the market. I mean, the market will constantly throw you curveballs and do things that hasn't necessarily done before, and that's the way I guess it keeps investors on their toes. So looking at it on a smaller time frame, if you were to go to, say, the daily time frame for Bitcoin, the 50-day is something that we've talked about before that Bitcoin's really battling against. It's currently slightly above it right now. The 50-day SMA is just below $43,000. It's been a level that previously, once we got below it, it took a lot of fight to get back above it, right? We got below it here in May, and we didn't get back above it until basically about a month and a half later. Here we got below it in July, and then we didn't really durably get back above it until September, right? This was like late July. We got back above it late September. We dropped below the 50-day SMA over here back in mid-January. And while we have had some daily closes above it, we're still not durably pushing through it at this point. And so if the 50-day does hold as resistance, then you might argue that it's emulating something like that, right? And again, if you go look at the short-term bubble risk of Bitcoin, you can see that that's essentially how it got back down to the 20-week moving average, right? Is by just getting pushed down by the 50-day SMA over and over and over again until finally it got back down to the bull market support band, right? We actually went slightly below it on the daily time frame, but we held it as support, and then we got another pop back up to the upside. So all relevant ways, I think, to look at it. And again, I mean, I see people talking about it as if it's 2016. I see people talking about it as if it's like 2019, 2020. My view is that it's probably neither of them. It'll probably do something slightly different than it did in both of those prior cycles. And again, one thing to think about too is that this cycle, if you say look at 2023 actually looks more similar to sorry, let me pull this up. I pulled the wrong one up. So 2023, and I want to average out election years, right? So 2023 actually ended the year at a very similar spot as to where most election years go, right? And so, I mean, yes, we could compare Bitcoin in 2024 to 2020 and 2016 and 2012, but maybe you make the case that you compare it to another year, maybe post-election years, right? Maybe you compare it to 2021, or maybe 2013 or 2017, or perhaps you now compare it to pre-election years. But again, I know this stuff is somewhat hand wavy, and I don't know exactly where it's going to go in the short term. My general views on the market with Bitcoin is to DCA it at a risk level that you are comfortable with, or over a time frame that you're comfortable with. That's my general recommendation, and to just be patient and ignore everything else. That's been my general view for a long time, and we'll continue to talk about the implications of various moves and how high they could go, how low they could go. But at the end of the day, I don't base my own investing strategy on that. There's a couple other things I wanted to mention, and that is, you do of course have things like the fib retracement stuff that we talked about, and it has at least been enough to cause a short-term correction off the 618. And the reason I bring that up is because that's where it corrected back in 2019. That doesn't mean that it has to carry out that same pattern, right? I mean, if I suppose what you look at is to see that if it can hold this level here, right? If it can, because it went to the 618, it came back down to the 0.5, right? Can it hold this level or not? If it can, then it would favor pushing back up to the 618. If it can't, then it would favor pushing back down to the 382, which is actually slightly below the bull market support band. And again, you could look at things like, other aspects to the market, like Bitcoin dominance and altcoins and all that other stuff, and see that, if you look at like altcoins, they've basically been relatively flat against Bitcoin for a while. This would imply that there's still liquidity in the altcoin market that could make its way over to Bitcoin going into the halving. Same thing with, like total 2 minus USDT to Bitcoin, right? I mean, yes, I get that it has had a bounce recently, but it's still, I mean, at this point, right, at least over the last few weeks, it's been bleeding back to Bitcoin. So one of the cases to make, again, for Bitcoin is that there is liquidity in the altcoin market that Bitcoin really likes to absorb. And we've seen that, happen many, many times. And it's one of the reasons why we've spoken so much about Bitcoin dominance. And I know it gives me a relatively bad reputation for talking about it in such a bullish light for the last couple of years. And I see other videos that people do where they've just been calling for alt season and Bitcoin dominance to crash for the last 2 years. And everyone seems to be really happy with those videos because it would certainly benefit their portfolio more for altcoins to pump than for Bitcoin to. Like, if Bitcoin pumps, then it sort of steals the show. But what's fascinating is how, dominance has moved up for a long period of time. And yes, people are going to constantly call the top on it. And again, they will eventually be right. And it's possible that the top is in. Again, I mean, it's possible. We've seen it. We've seen dominance top out at the end of pre-halving years before. It could certainly happen again. The reason why I suggest to be open-minded is because we have not yet seen the Fed pivot. And so it would still favor lower risk assets over higher risk assets. It's one of the reasons why mega cap tech stocks continue to go up over some of the smaller caps, because we just simply do not know when we're going to go back to looser monetary policy. And so, you know, I know it has certainly made me the bad guy to talk about Bitcoin dominance, and I don't really like being the bad guy. I would very much prefer to dance with everyone. But, you know, I mean, and again, like, just as everyone was giving up on it, it's now up 4 weeks in a row. I mean, again, this week isn't over yet, but, you know, we're right back up to where we previously were, you know, just a few weeks ago. And if you think about it, if you look at like a line chart, in the last several years, right, there's only been a few weeks where dominance was higher than it is right now, but yet everyone acts like the current dominance level is an awful level, right? I mean, you know, being at 52%, sort of people act like it's so low, but it's like, you know, we just spent a long time grinding this entire way up, and now that we push slightly lower, it's seen as like the end of, you know, the end of it. Remember, and again, I go back to this constantly, when in prior cycles, when Bitcoin got those rallies, that's what broke all Bitcoin valuations down. Remember, right? If you look at like all Bitcoin pairs, that's what made them break down was those really strong Bitcoin moves. And that's where they broke off of these support levels. And again, you know, while altcoins did get a bit of a surge against Bitcoin following the spot ETF, have they not just been slowly giving it right back? I mean, every single week they're going down 1% to 2% against Bitcoin. So I think that's the case you make as well. You know, if Bitcoin does fall into the 20-week SMA, or even if it doesn't, and if it does push higher, then we could see all Bitcoin pairs break off of this support level. Now, for those people that would like me to talk more about the altcoin market, and I will try to do so, but I did want to express again the reasons why I focus mostly on Bitcoin is because my general expectation has been that altcoins collectively would bleed against Bitcoin, right? And I feel like they have. But as always, there are a few that outperform. And I think one of the troubling things about my views are that even if I express that some altcoins will outperform, because everyone knows my general view about altcoins, then when any specific altcoin does outperform, it's sort of seen like, oh, well, you know, Ben was wrong about that. Guys, I mean, every single cycle, there are some that outperform. I mean, last cycle, Chainlink was one that outperformed. And there were many others that outperformed. And Chainlink has shown some relative strength recently, too, against Bitcoin. But collectively, right, the altcoin market is still struggling against Bitcoin. But that doesn't mean that every altcoin is struggling. And so as I've said before, right, if you want a certain altcoin in your portfolio, the strategy that I would recommend would be a DCA strategy over trying to time anything. Because if you go with my views that alt Bitcoin pairs are bleeding, there's always a chance that the altcoin that you want to pick up doesn't bleed. There's also a chance that the bleed is over for the altcoin market against Bitcoin. So again, if there's an asset that you want and you think that it's fairly valued and you think the fundamentals are sound, then the best strategy, I think, would be a DCA strategy. My only point has basically been that if you were DCAing Bitcoin over altcoins collectively, you would have come out ahead, right? And this shows this. I mean, like if you were DCAing altcoins over Bitcoin here, then they kept losing value against Bitcoin, right? They just keep losing value. Now, over the last few months, they've relatively flatlined here. Now the question is it going to break down again, or is this where it forms some type of macro bottom? And you could look at it in two different ways. I mean, you can kind of see both patterns where you put in a low, right? You put in a low, and then you put in a lower low, and then you get a pump back up, and then it still fades down. Here you put in a low, you put in a lower low, and then you came all the way up here and put in a higher high. But in both cases, it still eventually faded down and took that out. So it's hard to say, right? Like, it's hard to say if this is going to happen again. I think there is a case to be made that it could. Note that on both of these breakdowns, it was on a Bitcoin rally where alt Bitcoin pairs really took a huge hit. And so do be aware of that. There's also cases in the past where alt Bitcoin pairs take huge hits during, not during Bitcoin rallies, but when Bitcoin's flat below the 20-week SMA. Those are also examples of where they take hits. And you can see that happened over here in May of 2022, right? Alt Bitcoin pairs took a pretty big hit as Bitcoin was sort of just trending below its bull market support band. So those are sort of my thoughts on the market right now, and as it relates to Bitcoin. Bitcoin is at just over $43,000, and I would say, let's see. I mean, as long as the 8-week holds, then it potentially makes the case for not having to visit the 20-week SMA in the short term, which in the short term I imagine people would like. The longer we go without testing it, the less likely we are to hold it, right? So it would almost be better to go back down soon and test it and just check in with it, because again, the longer that you go, right, if you end up going 5 or 6 months, as history showed us previously, then there's a higher likelihood that you end up breaking it, okay? So I still think we're in the window right now where it could theoretically hold. We've seen, we've seen prior Februaries of having years where we held it, but we are starting to flirt with those longer time frames of, getting beyond, 4 months or so, where it could become problematic if it doesn't happen in the next few weeks. And not problematic in the sense that it can't move up. I mean, again, look at 2020 and 2021 is a great example of just how long it can go, right? And again, the rally really started in October and lasted until April, right? This rally here started in October, and you can see that this first top over here occurred in January, and this first top right here has occurred in January. And you can see that it held the 8-week SMA, right? Here we got slightly below it. So if we do push up, then what I would look for is Bitcoin dominance to hopefully go up with it, and then see how the altcoin market performs with respect to that. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.